All right, Bulls and Bears, let's get into it. Back with another dose. Thanks for being here. So much to get caught up on today, everybody. A lot of things happening. The countdown is on. Just a few more days. We're going to see the transition into the new administration. Will all you-know-what break loose? The very next day, the administration's saying they're going to waste no time implementing a lot of very interesting policies and drastic changes from what we've seen the last 4 years. So we're going to see what kind of economic impacts that has. We're going to talk about that here in a bit. We're also going to talk about the credit card delinquencies, and it's not looking so good for consumers, folks. Looks like we might have hit a turning point with U.S. credit card debt, and all of a sudden something happened very interesting in the past couple months with credit card debt. We're going to talk about that. Also, Capital One sued, accused of cheating customers out of billions. With a B, billions of dollars. We're going to get into that and a lot more. Let's go ahead and start right here, though. We've got Starbucks out there sagging profits, looking to get customers back into the store. So here's one of their tactics. I don't think this is going to work, but you let me know what you think about this. They're ending their open door policy. It used to be you can go there, pretty much get on the internet. You've probably all seen the people there at the coffee shop with their laptop, and sometimes not even with the drink. They're just hanging out using the Wi-Fi. And then we know about the problems that they had with homeless people, especially out west here, Seattle, and many different cities in California, with the homeless people coming in and not just using the bathroom, but hanging out in the bathroom, doing bum baths. Isn't that what they call a bum bath, where they take the cloth and they just do the underarm? I think it's called a bum bath. Doing bum baths in the bathroom and using the bathroom and not really buying anything. And they said that drove customers away. Well, they're ending their policy. Now you have to be a paying customer in order to use the bathroom. Quote, the changes are a practical step that helps us prioritize our paying customers who want to sit and enjoy our cafes or need to use the restroom during their visit. So what they're saying is the sagging profits are partly because of people were scared or didn't want to hang out with a bunch of people that were just hanging out there. They didn't want to be in the restaurant with a bunch of people that weren't paying. For example, homeless people, just people hanging out to use the internet for other reasons, hanging out there for whatever they do. Some people doing their homework. I've seen a lot of that. So I don't think it's going to work. I think the sag in profits is because their coffee is too expensive and people don't have a lot of extra money to spend. And you look around at some things and you think people do have a lot of money to spend. Well, they're cutting back on coffee. You look at the sports stadiums, still pretty full. You look at a lot of restaurants, still lines outside the door, especially on Friday and Saturday nights. Some areas where you look, it looks like there's no slowdown at all. It looks like people have unlimited credit card limits that they can just keep going up and up on. And we see when the debt keeps increasing, you have to ask yourself, where does it end? All right, how can we just, everybody go further into debt and there's no end? It just seems like people keep spending and spending and spending. Well, things are happening. Now, keep in mind, they're doing a lot of things to prevent people from getting buried too far under the debt. One is the debt forgiveness. We see what's happening, billions of student loan debt. We see credit reports now being wiped with medical debt, helping people keep their credit scores up. And people may not even choose to pay the medical debt if they know it's not going to affect their credit. And maybe they could just fight against the collectors, they call them, to try to get them to pay. But they're doing a lot to keep this propped up. The down payment assistance programs, thousands of those across the country, keeping the housing bubble propped up. Now you've got 12,000 homes wiped out in a very short amount of time in Los Angeles. That's going to really put a floor under home prices here in California when you look at the cost of material and everything else. And now the shortages, big surge in rents in Los Angeles County as everybody's competing to get the same home or to try to rent the same home. And they're talking about price caps and talking about landlords should not be price gouging. They're trying to come up with laws to prevent people from raising their rents because of the housing shortage now, because of all the fire devastation. So we talked about that a couple of reports ago, but let's talk about this when it comes to credit card spending, folks. We've got this. Look at this headline. Americans defaulting on their credit card debts at record levels, says a new report. So we see things like this. We know that defaults have been spiking. Folks, we're at record levels now. But yet you still see a lot of people out, like I said, at the restaurants, many restaurants full, sports stadiums full, drive by the casino, parking lots full, people in there not winning money for the most part. Most people at the casino lose money. And you wonder, where does it end? Where do these people keep up coming up with this money? But then you see headlines like record levels, credit card defaults. So you know something is going on, and it's very divided. We have the top 30%, especially not the millennials, but the baby boomers, the retirees, a lot of them doing pretty good. Not all of them, but a lot of them doing pretty good. Could that be the majority of the people at the restaurants, at the stadiums? When you've got a nation of 340 million people, it doesn't take many people to fill up a sports stadium of 60 or 70,000 people. But then you look at the 70% down, and that's the people living paycheck to paycheck. We've talked about here many times how that particular segment of the population isn't doing as well, not even close to as well as the top 30%. So could it be the top 30% making up the bulk of all these crowds that you see spending money, seamlessly ending never-ending money? New report says this could mean more pain in 2025. Well, yeah, they're trying to cap interest rates now. The new administration saying that we need to cap interest rates on credit card at 8%. Even that, I don't think it's going to be enough. It's going to have to be debt cancellation, kind of like what they're doing with student loan debts, in order to really, really help people. But the problem is, if you still have credit available, the people that you get rid of the debt for, they're just going to go out and run up new debt. As soon as that debt gets forgiven, they're going to say, wow, where can I go take a vacation? What can I go shop? What can I go buy? Down payment on another car. That's what people are going to do. People love to spend money. I shouldn't even say money because it's mostly just credit on a plastic card. Let's move on to this, folks. Out of ABC, Capital One sued by U.S. watchdog allegedly cheating bank customers out of $2 billion in interest. So what they're saying is basically they have this low interest online checking account, their savings account, and it earns interest, but they came out with another one that earned higher interest, but didn't offer it or didn't advertise it to the people that were already in the lower rate account. And it looks like they were really trying to keep people into the lower yielding account. And also, they weren't raising the yield along with the Fed funds rate. You notice that? It's interesting how when the Fed funds rate went up, you didn't really see the yields rise for the most part, a little bit, but not percentage-wise, not as much as the Fed funds rate was being increased. And then on the downside, when the Fed was cutting, you didn't see interest rates drop with these credit cards. And rates didn't really drop in correlation with how much the funds rate went down. So I think it's to the upside and the downside. The banks, the credit card companies, they're taking advantage of people the best they can. And it goes back to the whole price gouging issue. Should you ban landlords from raising their rents when there's a housing shortage, like what's happening here in LA? Some people say no, the free market will work it out. If people don't have the money to pay it, then they'll have to bring their prices down. They say it just works itself out with the free market. Other people say, no, we need the government to come in, make new rules, put caps on things. Same thing with credit card interest rates. Do you agree that the credit cards should be able to charge unlimited amounts of interest on their cards? If you do, then you're probably in the group that thinks there should be no cap on rents. So believe it or not, there's people out there saying the credit card companies should be able to charge infinite, 100%, 200% interest rate. So in other words, you spend $10 and you don't pay it off, you're paying $30 the next month. You just tripled how much you owe basically with a 200% interest rate. It's not being done because it's illegal to do that right now, but people out there actually say there should be no limit, that's the free market. And on one hand, you have to think about it like this. If you don't like the interest rate, don't use the credit card. All right, nobody's forcing people to use their credit card. You could say that, but then you could say, well, in order to survive, because everything's so expensive, people are surviving on their credit cards. They are using these cards to survive. In many cases, people wouldn't have utilities on. People wouldn't have gas to fill up their car to go to work if they didn't have the credit card. So then when you see debt continually increase, you know that people are living, many people are living on their credit card. So then that group says, yeah, we need to put a cap on the interest rate. So it's very interesting when you see the opposite views and the opposite opinions. What's your opinion on that, though? Should they be able to go unlimited on their interest rate? if you say no, then you don't believe in what some people call the free market. Anyways, let me know what you think about that down below. It's very interesting, though. All right, on to some other news. We've got the parent company of Meta, which is Facebook, laying off people, laying off low-performing workers, and they're cutting 5% of its workforce this year. It's going to be very interesting to keep an eye on that. We've got Elon Musk out there talking about now buying TikTok. He already owns almost everything else. It's pretty scary, folks, when you have one person able to just buy up everything, because then as soon as that person implements their views, then you've got a big chunk of your options already taken up, right? So if he owns X now, which used to be Twitter, if he buys TikTok, I mean, that's a lot of the social media usage out there just between those two. And then you got to start to wonder, if this is good. This is consolidation, folks. I like less consolidation. I like more options, different owners, not one person owning all the different platforms, or in this case, many of the different platforms. I haven't actually used TikTok in many, many months. So I probably wouldn't really affect me, but some people are really concerned about what he's doing or what he's not doing. Excuse me. Some people are concerned about what he's doing or not doing, and what he's allowed being to be posted on these platforms. Microsoft, job cuts across all departments here for 2025. Very interesting. The big companies were seeing job cuts. I thought there was going to be a big economic boom with the new administration. Apparently, some of the big CEOs of the tech companies do not agree with that. Back up to LA again. Because of the wildfires, tens of thousands of people displaced, 12-something thousand homes lost. Folks, you got a lot of people competing for the same rental property, and that's why we're talking about price caps and no price gouging, talking about an intervention. But rents are already up as much as 20%, folks. And this is just, a week into the fires, and rents are already going up. That's why you have people talking about that. But look at this. Look what happened in November. Could this be a sign? Why did Americans suddenly pay off their credit card debt in November? Debt got paid down. People spent less and paid down more. Very interesting, especially going into the holidays. So we usually see this at the time of when the tipping point has been tipped, basically, when the tipping point has been hit, and we've seen this in the past. Banks didn't cut back on the lending. The credit limits are still high. Banks are not loosening, or banks are not tightening. They're still loosening for the most part, most banks. But yet we saw this drop in debt. What happened? Total credit card debt fell 12% at an annualized rate in November, a plunge not seen since the onset of the pandemic. Well, go back to the article that we talked about at the beginning. Defaults just hit a record high. So are the banks writing off these defaulted credit cards, and therefore you see the total debt drop? That's what it looks like to me, folks. I mean, add one and one together, right? Back to the beginning of the video, record defaults right now in credit cards. But yet now, for the first time in a long time, a big drop in credit card debt. I think they're writing these off. In fact, let's do a quick check on that and see if there's a lot of write-offs with the banks. All right, let's take a look at an article that I think explains this. Remember, that was the November numbers where we saw the drop in credit card debt. A month prior to that, October, bank charge-offs jumped 189%, what it means for businesses and consumers. So the charge-offs make it look like people are paying off their credit card. Sure, the debt is disappearing because it's being charged off. Right? Is that what's happening? I mean, please let me know what you think about that down in comments. But it's very interesting when you see the debt continue to rise overall, but yet 1 month it pulls back, especially around the holidays. And here's how they put it over at Investopedia. In a normal month, Americans' total credit card debt increases. We saw that for years and years, except for 2020. When something goes wrong, like 2020, with the economy, it plummets. And that's what happened at the beginning of the health crisis, remember. It happened during the Great Recession. It happened when the pandemic hit. They're even talking about it here. And it happened in November. So what is going on? Is the uncertainty over the new administration? Is something else brewing behind the scenes that people can feel? They just can't explain. Folks, I feel some big, let's say, uncertainty coming up here. And again, we've got days away. We're in the countdown now to the new administration. And I see some big fireworks popping off. I mean, look what's happened since the beginning of the year. We've had terror attacks, New Year's Day. We've had the worst fire in history in LA just happened. So many other things I think are brewing that you're going to see. I think you're going to see some unrest. And I would be very, very concerned about being heavily into the markets right now. I'm taking a step back approach right now. I'd say I'm probably the smallest in the markets right now that I've been in since I started investing like over 20 years ago. So that's me. I'm being very cautious right now, folks. I see a lot of things, a lot of risks out there. Capping the credit card interest will not help, folks. It'll make it less worse, but it's really not going to make things much better. There's critics out there now, economists, talking about no cuts this year because basically the central bank's between a rock and a hard place. If they cut rates, inflation's going to get even worse. People will be out there bidding up prices even more. But if you raise rates, the levels of debt right now, it's going to make it even more unsustainable. And you're going to see already the record high defaults in credit cards get even worse. So I'm not sure how much longer this is going to last and still look sort of normal. I don't think this has been normal for a long time. It's just people got used to being in record levels of debt, or they got used to being in such big amounts of debt that things look like they weren't changing. It looks like it's just going to happen, just going to go on forever. But it's happening, folks, and I would be very, very cautious right now. Also, recent report, PPI inflation just accelerated to 3.3%, driven by core services, which is up 4%. Both are the worst readings in 2 years. Folks, how much longer can people hold on? Well, a lot of them aren't. A lot of them are defaulting, like the record defaults have just shown us. Right? We're going to see how this plays out, folks. Not far now to possibly big things and big chaos. Be ready. As always, keep stacking, everybody. Big love. Bye for now.